Thank you guys so much. We officially have over 12,000 followers on TikTok, and I wanted to do something special for you guys. So I said, you know what? All the questions, I've been getting questions on every video. I can't keep up, and I'm missing some of them. I'm trying to answer what I can, but I was like, you know what? Let's scratch that. Let's do something special. So we took various comments and questions and stuff like that, and we compiled it on a list, and now we're going to do a special TikTok, YouTube video collaboration where I answer these questions. I didn't do all of them, guys, but I did do enough where I feel like it'll be useful to you. And I want to tell you thank you guys for following the journey, and you see the growth, you see everything that's happening. So we're going to cut to the chase, and let's start these questions. But like always, it's the real Mr. Marcelle, aka your favorite loan officer. And before we start, hold on. Bing! All right, guys, so I have a lot of questions and a lot of energy. I had no coffee actually, but I'm just excited to answer these questions. So let's do it. First question, let's go. She might pop up on the screen or something like that. I don't know.
Okay, so the first question is from Sweet Pie Lee.
Sweet Pie Lee, you're the number one person that we're starting with. Let's go. What's the question?
Okay. The real Mr. Marcelle, I'm looking to buy a house but only using $6,000 instead of 3.5% down. What's the pro and cons in that? Please and thank you.
Okay, so Sweet Pie Lee wants to buy a house using 3.5% down or $6,000. First thing first, it depends on your credit score. If you have under 620, conventional will not be for you because the rates are going to be horrible and they won't even take you, first of all. So you might be looking at FHA. That's number one. Two, if you're looking at FHA, the minimum they'll do is about 3.5%. So if your 6,000 isn't 3.5, you won't even be able to do that. So that might cancel your loan altogether, unless you're a V8. If you're a V8, you'll be fine because you don't need down payment, so you can excuse that, where the 6,000 can be used towards closing costs and things like that. Or you might be doing a USDA loan. Now, another thing that we could do is if you only have $6,000 and you're like, hey Malcolm, this is all I have right now, you might want to look at a down payment assistance program where they'll cover you the 3.5% and you just worry about the closing costs of the loan. So you can technically get a house and use the $6,000 just towards closing costs and not the actual down payment. All depends on your situation. So when I say your situation, it depends on how much money you actually have towards closing, depends on your credit score, and it depends on your debt to income ratio, because when you do down payment assistance programs, they have stricter guidelines on the debt to income ratio that they'll give you. And it also means you have to be a first time home buyer. A lot of these programs where they're giving you money and stuff like that, they only want to help first time home buyers. So that all plays a part, and it depends on where you're buying at. You can't be looking at a house too expensive with the debt to income ratios and high taxes and stuff like that. So if you want more information, if you would like to work with me, feel free to go on my Instagram, The Real Mr. Marcelle, click the link, and I actually have a free 15-minute consultation call, and we can talk about it. I can check out your scenarios, I can check out your credit, your income, your W-2s. I'll help you with everything. We'll finalize it, and I'll see what program fits you best. I hope that helps. Bing. Next question. Let's go. I'm ready. Let's do this, guys.
So the next question is from Night Coog. What's the highest DTI for an approved / eligible FHA?
Okay, so for FHA you have two. I'm not sure if I spoke to you guys about this on TikTok, but there's a front end and back end. So front end usually is all your debt. No, I'm sorry. Front end is your mortgage payment. Yes. Your mortgage payment can't be over a certain amount, and your back end is your debt plus the mortgage payment can't be over a certain amount. So for FHA, don't quote me on this, I believe it's either 46 or 46.9. And your back end is supposed to be 56.9. You're probably like, Malcolm, 0.9, what does that matter? When it comes to your debt to income ratio, every little bit helps. Because sometimes we have credit card debts, we have a car, we have different little things that add up and it increases your debt to income. And then also when you add in a mortgage payment, it's like my regular debt plus my mortgage payment increases even more. So that 0.9 saves a lot of deals. You'll be surprised at how many deals it saves. But that might also depend on your credit score. Sometimes with FHA, if you're like under 620, they're a little stricter with the debt to income ratios. So it all depends. I know when it comes to loans, it's not one cut and dry scenario or answer. So I'm just trying to help you guys get a grasp of what's going on. I hope that helps. If you have more questions, make sure you message me on Instagram, the real Mr. Marcelle. Let's do it. Next question.
Okay, the next question is from MegCot83. Can you please explain the process of buying your first house? My parents never explained anything to me, and I don't know where to start.
The first process is watching videos on YouTube, Instagram, and TikTok, especially if they're by the real Mr. Marcelle. That's the first thing first, because all my videos are informative and I'm trying to help you. The second thing you want to do is you want to go to my link in my bio. I have a free ebook where I talk about the steps, and then click a consultation call with me. After you do that, on the consultation call, I'll tell you what documents you need. I'll tell you get your 2 W-2s, get your 2 tax returns, get 2 months bank statements. Let's see how much money you have. What area are you thinking about going? And then I'll work on getting you pre-approved. Once you get pre-approved, I'm going to ask if you have a realtor. If not, I'll refer you to some of the great realtors that I know, and they'll show you different houses that fit your criteria. I'll explain to you the difference between getting pre-approved for this amount and getting a house that you actually can afford. So a lot of times people get it pre-approved for this house, but once we do their bills and stuff like that, they're like, you know what, I feel more comfortable paying this amount of house. And then we help you find a house. Well, the realtor helps you. I just do the numbers based off that. And then after you get that situated out, you find a house, you make your offer, you sign contracts, you put your down payment. Then I actually start working and I go through the back end, doing this, making sure that the bank likes your file, they like your loan, all your documents together. We sign contracts, you sign more, you sign loan disclosures. And then after the bank finishes doing a thorough investigation of you, because they're like the FBI, they start going through everything, then we get towards the closing disclosure, which is like the final CD. After that is submitted, then we go to the table, you sign it, everyone gets their check, you leave happy because you got a house. Now that was like a fast forward quick version, but if you want more information, like I said before, my 15-minute consultation talk is completely free, you pay nothing. All I ask you to do is put your email in and share my videos with more people and let me help you. That's all. All right, hope that helps. Next question.
All right, the next question is from Miss Chicago Clark. Can you discuss Streamline options? Okay,
so Streamline is pretty much after you close an FHA loan or I believe it's for FHA. After you close an FHA loan, they do a Streamline. So say you close a loan for about 5%. I'm sorry, your interest rate was about 5%. And you're like, oh wow, rates are much lower. Can I do a Streamline FHA? All right, Streamline pretty much is like a Streamline. It makes it go quicker. So you could refi through a Streamline and it'll go quicker. You don't need all the documents. All they do is, I believe all you need is do your signature, update pay stubs, and they keep the same appraisal from last time and they push it forward. You can do the same thing when you do like a down payment assistance program and they have a higher interest rate and you want to streamline into a regular FHA, it just pushes it quicker and they skip some of the steps that they would do on a new purchase of a property. So you skip certain steps. But like always, for more information, reach out to me, let me talk to you personally, let me see what you're going through, what you have, and see how I can better assist you. Because sometimes it might not be better to streamline, it might be better just to do a refinance and get out the mortgage totally and move it to a whole new bank and stuff like that. So every person has a different scenario, a different situation. So let me see what works better for you and I'll help you. All right? Hope that helps. Next question.
Okay, the next question is from Andra Ornelas 18. Top 5 things we should do when we refinance.
Ooh, this is a good one. This is actually something I should make a video on. I don't know if I'm going to give you all 5 now because I really think I should do a video on this, covering this, because I can talk about this for hours. But I will give you one major thing. The top thing to do is to make sure you get not a good rate, because that's what everyone thinks. They're like, oh my God, I have to get a good rate. Look at how much you're saving per month from the refinance. You want to look at what you're currently paying and have your loan officer run a scenario where you'll see how much you're saving, whether he's getting rid of the PMI or what is the monthly savings towards you to make sure everything makes sense. Because when you do a refinance, you push back your loan. So if you have, let's say you only were in the house for 2 years, you have 30-year loan, now you have 28 years before you finish, you're starting all over again. So you want to make sure that that money that you're now adding on top of your loan makes sense. So if you're only saving $50 a month, you're like, hey, $50 times 12 is $6,000. Did I do that right? 50 times 12. No. Yeah, that was right? No, I lied. 600. is $600, you're like, hey, that's not really much. But then if you times that by another 30, you're like, it's a little bit more. Versus if you do it with, you say, okay, nah, I might be all right. And then you look at another option, and you're like, wait, on this option, I'm saving $200 a month. Times that by 12, that's $2,400. No, 24,000. My math is totally bad right now, guys, so please don't hold that against me. I was right, 24? Okay, whatever it is. You're looking at it and you want to say, hey, that $200 is a lot more per month versus my $50. Let me go back. Okay, so yeah, it was $2,400. I was right the first time. I shouldn't have second guessed myself. But the point is, look at the numbers that you'll be saving every month versus how much you're saving, how much that interest rate is, because sometimes just to get a good interest rate doesn't mean you're saving much. And sometimes it's not even worth it to try to get a better interest rate, because a lot of lenders don't tell you this, but banks charge you for interest rates a lot of times. People will be like, oh, I got a 2.5, I got a 1.99, but they don't tell you that, hey, I had to pay $12,000 to get that rate. So you're like, $12,000 when it's not worth it all the time. So know your numbers and work with a loan officer who's going to be honest and truthful to you. That's one thing I do. I try to tell I don't try, I do. I tell my clients everything. I tell them what's going on with the file. I try not to bring them all the bad news. I try to solve the issues before it comes to them. But if it's something that I can't handle and it's taking longer, I'll be like, hey, this is what's going on. These are the issues, what's going on. But I realistically tell them, hey, you're only saving this much. It might not be worth it to do it. Even if it costs me the deal or costs me making money, I'd rather be honest to you guys and help you, because at the end of the day, honesty and helping people brings joy to me, and that's what's going to continue to grow my business. I'm planting seeds. So I know that was a lot, but that's the truth. Look at what you're saving per month versus the interest rate, and get yourself a really good loan officer. Get you someone who's going to help you, who wants to see you succeed and help you. And if you're looking for one, guess what? Look at the back of my shirt. I'm here to help, all right? So message me on Instagram, The Real Mr. Marcelle. Do we have any more questions?
Yes, we do.
Oh, man. Thought we were done. On video today.
The next question is from Stephanie Francis Creamy. What states are you licensed in?
That's a good question. So, right now I'm licensed in New York, but I can still do loans in New Jersey, Florida, Atlanta, Pennsylvania, Connecticut. All right? And if there's a state that I can do, and I can still refer to other loan officers in different states, because I do have a network of loan officers, and they will work to help you, and I'll still be here to help you either way, because I like helping people. So a lot of times I refer people out, and I still help them with their questions, because at the end of the day, it's not about the monetary gain where I can get in my pocket. I really want to see you get a house. Just knowing that I helped you means the world to me, and I love getting testimonials. And I've been getting a lot of them on my Instagram, actually. So TikTok, I appreciate you guys. YouTube comments are growing, and my Instagram is growing. So thank you guys. I really appreciate it. I do this out my heart. I like helping you guys, and it's making me smile seeing the community and all the people that are learning about loans and the future millionaires that will be there. And I'll be in your testimonial. That's how dope is that? When you guys get your home or you become millionaires, you're like, you know what? That guy from TikTok, the real Mr. Marcelle, he actually helped inspire me to get my first house and get my first investment or get into stocks. Like, that's what it's all about. It's all about giving back and creating a legacy. And that's how I'm going to do it, by helping people get houses and create generational wealth. So it means a lot, guys.
All right. The next question is from Indy Dixon. Can you tell us what FICO system the mortgage companies use to qualify you?
Whew, that's another hard one. It's not one system. What they usually do is, each bank is a little different. I know from the broker firm that I'm with right now, we pull up from all three, TransUnion, Equifax, and Experian. We pull up all three scores, and we just go to the middle one. So if TransUnion is saying 800, Equifax is saying 750, and TransUnion is saying 500, we'll use the middle score, which will be 760. That's just how it goes. But they still look at if there's charge-offs, if there's negative stuff. So that all plays a part in it. I hope that helps.
All right. Indy Dixon also asked, can you do a video on programs for down payments and closing costs?
I did one for closing costs on TikTok, but I'll do it again. Pretty much the simple math is usually, depending on what state, Like I know Jersey has for Jersey for some reason they have their closing costs is a lot less than New York. I'm not sure if it's because of the taxes or it's less people involved. But for Jersey, it's 3.5% of the purchase price. 3 to 3.5 is usually what you're going to be paying around closing, around that number. For New York, it's usually 4.5 or 5%. And as far as down payment assistance, there's a lot of programs, but there's not a lot. So I don't know if I can do one video, but I will do a video talking about one that I actually have access to. How about that? I'll do that maybe another week or two. I'll do a program about down payment assistance. All right?
Next question is from Lil Holly Production.
Why we? You guys on TikTok really had a lot of questions. I didn't realize we picked so many questions. I thought it was it. I thought we only did 5. And I know these weren't even all the questions. So if you didn't get answered, please do not get mad. I will. If you guys on TikTok boost this video up, I'm gonna post it on YouTube. I'm gonna post it on YouTube. And I'm gonna put it in the comment section. Hey, your question was answered. Your question was answered. If you guys blow this video up, I promise you guys I will do another one. And we might even do one live on TikTok. How about that? But you guys got to start supporting my YouTube and my Instagram, guys. TikTok followers. I need you guys everywhere, right? Let's create that community. We still got to come up with a name. I'm thinking Marcelle Ninjas. Okay. All right, what's the question?
He asks, can you add closing costs to a mortgage?
Yes, you can. That is called seller's concession, where you take a piece of the closing costs and you say, hey guys, I need a little help with this. Can you put this in your concession for me? And it actually gets built into your mortgage. 100% you can, but you need the seller of the property to agree to it, and the house price has to appraise for enough where it can cover it, and the mortgage has to say okay, but usually the mortgage people don't really care. It's usually the seller you have to work with and hope that the house appraises for more. But yes, you can do it. Good question, good question.
All right, the next question is from Amandiak. My boyfriend already has a mortgage, but was going to take more out to pay something off. If he added me to the mortgage and my income, do they use my credit?
Yes, anyone added to the mortgage, everyone's credit gets run. It doesn't matter what. And for mortgage purposes, they use the person who has the lowest credit. So say your boyfriend's 3 scores all total up to 750 and your 3 scores settle up to 650. They're using your score because your score is lower than his. So they care about your score, and that's where they'll give you the rates based off of the 650, not the 760. But the good news is your income helps boost him. So if he was to do a refi and he needed more income to take out more money, your income will help. So it might offset the little bit of the rate increase. And depending on what loan you do, if you have FHA and you do FHA again, you might fall within the credit. For FHA loans, there's certain credit criteria. So once you hit like a certain score, it doesn't matter how high you go, your interest rate will stay the same. So it might hit it. So it's something like, this is why I keep telling you guys, I can't stress enough, get a good loan officer. Because a good loan officer is going to play around with different scenarios to see which one makes sense. Does it make sense to have you on it? Are you boosting up the income where it makes sense to take out the extra money, or it might make sense where the interest rate is lower, is so much higher that it doesn't make sense to take it out. So many different scenarios and different things that we play around with. I keep stressing, get a good loan officer, guys, because we do a lot of work behind the scenes when we bring a scenario to you. So call me and I'll help you. That's why I keep stressing it. But the real Mr. Marcelle, go on Instagram. Message me. Let's do this. I will love to look at the scenario and see what we can do and see what's the best way to help you. Any more questions, or are we done?
Yes, we have 2 more questions. All right.
I need a break. Where's my tea at? I need a break with some water. Like my throat's getting so raspy.
You don't have to finish this before you could do that.
All right, guys. Only for you. See, this is love, guys. This is love.
The next question is from Shakira Brown. Would switching jobs affect my chance of being approved in the future? How long should I be on a job for better chances of being approved?
Okay, so we like to see 2 years work history. We love it if you're in the same field and you get promoted. So if you're like, hey, I'm a police officer, or I'm a firefighter, or I'm a nurse, and you're like, I'm switching jobs to make more money in the same field, that's fine. And 2 years, so we want to see 2-year work history, right? So try to keep that 2 years, and we don't like you to go down in income. We like you to go up in income. Hope that helps.
The next question is from Pepper Ann 49. Have a mortgage already, but interested in buying an investment property. How does my home loan affect my ability to acquire another mortgage?
Okay, so this is a really good one. Pepper, you're making me think. All right, Pepper, I want to do a video on this because I feel like it's time to start talking more about investment loans. I was on YouTube and I didn't see much people explaining how it happens or what actually the particulars about it. But for investment loan, you need about 25% down, sometimes even 30 now, because during COVID, they raised the regulations a little bit, most banks. Secondly, having a house doesn't really affect it because we're looking at it as an investment. So we're looking at what the building or whatever you're buying is going to produce. So they're going to look at the rent roll. They want to see that it can appreciate for more. They love it if you get it below market value because that means it automatically has equity in it. And they usually sometimes want to see reserves. Could be 6 months, 3 months. They just want to see that in case something happens, you have money to set aside for it. All right, and leases and stuff like that do help, but the appraiser is going to come out, check the building, also check the rent rolls to make sure it makes sense, and they want to see that it's going to be able to cover the mortgage and cover the mortgage with at least $1 more, but the more it covers it, the better. Hope that helps. But there are little things that we can do to help you with the investment also. But message me. We got to talk about that on Zoom. Boom, boom. Can't give you guys all my secrets now. Then you guys will never call me. But make sure you get my ebook. Follow me on Instagram, YouTube, TikTok, The Real Mr. Marcelle. You guys ain't seen my dance moves yet. TikTok's not ready for that. But I think that's all the questions. I appreciate you guys. Thank you so much for following me. I'm going to keep giving you content every week. Have you guys been noticing I've been doing Instagram videos every day now? Not videos, but I've been promoting on Instagram every day. TikTok's been getting videos every day. Even my Twitter, which I barely use, I've been trying to use that every day. So you guys, I'm giving you everything I have. Like, I'm tired. So make sure you at least follow and share this because this is all for you. This is all information. I do this all for you. I already know this stuff. I'm just sharing it to help you guys out, all right? The Real Mr. Marcelle, a.k.a. your favorite loan officer. Thank you guys for all the support. I appreciate you from the bottom of my heart. I hope you guys found this video helpful. If you have, make sure you comment below. Let me know. Like, share. Let me know what else you want me to talk about. You guys pick the videos. I just do it. Thank you. You guys want more of this? You guys want more of these videos? Then make sure you like, subscribe, follow, and go see my other uploads. There's a whole bunch on this channel for you guys. I want to make you guys millionaires. Thank you for everything. This is The Real Mr. Marcelle, and see you next week.